everyone. I wanted to do a quick video on money, a little bit of money talk here today. What I want to talk about are salespeople and credit traps. So, in America, we have, it seems like there's opportunity to get credit all over the place. I was in college, undergrad in the 90s, and I'm going to call it predatorial credit sales on the university campuses were just completely out of control. So what they would do is they would say, it's 0% for, 3 months, sometimes, 18 months, what have you. They really push. College students would get approved even though they may not be making a lot of income, because the credit cards want to get you used to using credit cards and basically living in debt. So that's a trap. I would urge you to, now if you do have credit cards, and you're paying them off every month, congratulations, but just be aware that can be having a credit card in itself can be a trap. The other thing is, if you're a little farther along, let's say you purchase a house, interest rates are at, in the 80s, interest rates were like 18%. Well, President Reagan and the economists and people in the government were able to, there were some things that were going on with Margaret Thatcher. I'm getting this like vague thought from PBS's Commanding Heights. It's a 3-part video if you want to learn something about some historic leaders in America and globally with the Commanding Heights. But anyway, back to traps. Refinancing can be a major trap. So in the 80s, people had mortgages that were, let's just say double digits, 10 to 18%. And then as the credit rating started going down, keep in mind at this time, credit, it is 2024 and it's in the month of August, mortgage rates are around 6, 7, 8%. So, but refinancing, every time you refinance, you're paying closing costs, assessment fees, and you're extending your in debt. And so you're extending the terms of being in debt. Now, it's always better to pay upfront in cash, because when you have payments, I'm still recovering from a broken, my shoulder, I'm sorry, it's a little sore here. I have a collarbone break that I'm dealing with. But yeah, going back to anytime you're paying somebody interest, you're paying more money, whether it's $1 or a yen or, any other monetary unit, you're paying for money. That's what debt is. You are paying a price for that money. I'm not going into how money works or anything like that, but I just want buyer beware, get into a mortgage at a rate and a payment that you can maintain, and then pay it off, or work, watch Dave Ramsey, just learn how to control your money, okay? The other trap that I really want you to think about, first of all, cell phones. Many times the cell phone companies work really hard to keep you in a lease. Lease equals fleece, people. You're always paying more. You might be like feeling good because you have like the latest iPhone or the latest, Samsung. I don't know. But when you actually run the numbers, you're paying more. So try to get whatever consumer good that you want paid for, and realize if you paid cash, you probably wouldn't have paid as much than if you finance it, okay? So the other thing that comes up in money situations are adjustable rates, and so arms, and so on people's mortgages, always get a fixed mortgage rate, and then also watch out very carefully. HELOCs often are variable rates. HELOCs is a home equity line of credit. That's when the mortgage folks are saying, hey, you want a second mortgage? And then if you get into a situation where the market's where it's a flexible or it fluctuates, okay? I'm using the wrong terms on purpose because I want you to get it embedded in your brain, the phenomena. I don't care as much about the actual, perfect, words for the acronyms that are out there. I'm telling you, this is how, the poor stay poor as they get into these traps, and they're spending, and their money basically does end up, not growing because they're always in a debt position. So I hate to use the word always, but I think I'm making my point. The other thing I would just say is beware of impulse fire sales. If you do this in, you'll get 70% off if you do this today. Well, if you weren't going to buy it before and it suddenly came, in your mindset and you think, it could be nice. It's very likely you don't need it. You weren't going to buy it. So plan your expenditures. Every single person I know falls subject to at least, some sort of impulse buys. Be aware of your mind, your state of mind, and remember, you must control your money. You have to be a leader and take charge of your money and tell it, as said in the financial world of people that are trying to help others get out of debt. You have to be in charge of, you have to tell that dollar where it's going to go. So that's what I'm going to wrap up with. I hope that's helpful. Just wanted to share a little bit of insight and wellness when it comes to money. And God bless you. God bless you good. And if you have questions, go ahead, engage with the comment. Give me a call if you want to talk about coaching or services. Visit Thor Wellness Group and register there. So thank you so much. Mwah! God bless you. Take care and be well and have a good day. Thanks. Bye.